Hello, good day to all the listeners out there. Welcome to the Daily Wrap. I'm Anton. Quick reminder, everything here is for education and entertainment, not financial advice. I'm not a licensed advisor, so do your own research or talk to a licensed professional before making any investment decisions. Wednesday was a mixed session. The tech sell-off continued but lost steam, while the Dow and small caps held up on rotation. Then after the bell, Micron reported what might be the earnings beat of the year, and all 32 US banks passed the Fed's annual stress test. A lot happened today. Let's get into it. Starting with the scoreboard, Wednesday was a mixed session. The S&P barely moved, down just 0.1% to 7,358. The Nasdaq fell 0.43% to 25,476. The third consecutive day of losses for tech, but much smaller than yesterday's 2.21% drop. On the other side, the Dow rose 0.35% to 51,848, and the Russell 2000 gained 0.3%, showing that money continued rotating out of tech and into traditional sectors and smaller companies. But the real story of the day came after the bell. Micron Technology reported earnings absolutely blew the doors of expectations. The stock jumped 14% in after-hours trading. We'll cover that in detail in a moment. This could be the turning point for the chip sector sell-off we've been watching all week. First story, and this is a big one. Micron Technology reported fiscal third quarter earnings after the bell tonight, and the results were extraordinary. Revenue came in at $41.46 billion against an estimate of $35.84 billion. That's a massive beat. For context, Micron made just $9.3 billion in the same quarter a year ago. So year-over-year revenue grew 279%. Earnings per share hit $25.11, beating the $20.20 estimate by over 20%. And the gross margin expanded to 84.9%, up from 74.9% the prior quarter and from just 39% a year ago. These are exceptional numbers. The drivers, cloud memory revenue hit $13.77 billion, up over 300% year over year. Data center revenue more than sevenfold. And critically, all of Micron's high bandwidth memory supply for 2026 is already sold out under fixed price contracts to NVIDIA, AMD, and Google accelerator programs. The stock jumped 14% in after hours. Remember, Micron had fallen 10% just yesterday on sector sell-off fears. Tonight's numbers answer those fears in a definite way. The AI memory demand story is very much intact. Second story, the Federal Reserve released its 2026 annual bank stress test results today. All 32 banks passed. The stress test puts banks through a hypothetical severe recession scenario this year that meant unemployment rising to 10%, commercial real estate prices falling 39%, home prices dropping 30%, and severe stress in corporate debt markets. Under those conditions, the 32 banks would absorb over $708 billion in total losses and still remain above minimum capital requirements. The key capital ratio fell just 1.6 percentage points, which is a comfortable cushion. The practical impact, because all banks passed, they are now able to announce increased dividends and share buyback programs. Bloomberg reported that the results immediately paved the way for major lenders to boost payouts to shareholders. One note for context, this year's results won't actually change capital requirements. The Fed has frozen those until 2027 while it revamps its testing methodology. But from an investor perspective, a clean pass across all 32 banks is a positive signal for the stability of the financial system. Third story, and this is the setup for tomorrow. Thursday morning brings the May PCE inflation report alongside the final estimate for first quarter GDP. This is the week's most important number. Here is why it matters so much right now. The Fed's June dot plot, released just last week, showed 9 of 18 officials expecting at least one rate hike before year-end. Traders have taken that seriously. The probability of at least one hike by December is now priced at around 90%, up from just 57% a week ago. PCE is the specific inflation gauge the Fed uses when making that call. In April, headline PCE came in at 3.8% year-over-year. Forecasters expect May to show a jump to around 4.1%, driven largely by energy costs tied to the Iran situation. If that number comes in hotter than expected, it could add further pressure on tech valuations that are already under stress. If it comes in cooler, it could trigger a relief rally, especially with Micron's strong results setting a positive tone heading into tomorrow. Tomorrow is the week's main event. At 8:30 in the morning Eastern Time, we get two data points simultaneously: May PCE inflation and the final Q1 GDP estimate. PCE is the one to watch. The Fed uses it as its preferred inflation measure, and with rate hike odds sitting at 90%, the market is sensitive to this number. We covered what to expect in the previous slide. A hot print around 4.1% or above could keep the pressure on tech. A cooler print could give the market breathing room, especially with Micron's strong results suggesting the AI demand story is intact. This is one of those mornings where the reaction in the first 30 minutes of trading will tell you a lot. We'll cover the PCE result and the market reaction in Thursday's daily wrap. That's the daily wrap for June 24th. Micron reported record earnings after the bell, revenue up 279%, EPS $25.11 against $20.20 estimate, stock surging 14% in after hours. All 32 U.S. banks cleared the Fed's annual stress test, opening the door for dividends and buybacks. And tomorrow morning at 8:30, we get the May PCE inflation print, the most important number of the week. Bye now, have a good day.